Hi, and welcome to this stock analysis of Medistim. Today, we will go through their economy, what is expected from them, the benefits and roadblocks that are unique to Medistim, and we'll learn a little bit more about what Medistim is actually all about. So, what is actually Medistim? Medistim is a Norwegian healthcare company that is focusing on making products that help with surgery. Basically heart surgery, right? In general, their products MiraQ are focused on measuring blood flow and generate pictures with ultrasound to get a visual about how the flow is around the heart, the speed, those kind of things, to see if it's any leaks or if it's actually flowing as it should be. This can help surgeons find issues early on, and it has a proven effect that shows that it provides long-term benefits for the patients. So, when it comes to the simple key ratios, you have the margin at 23% this year, you have the return on assets that is at 18%, the return of equity at 23.5%. One of the things to take notice of is that the earning per share is actually 13.66% each year on average. So it has actually increased quite a lot, and this actually takes into account just 3 quarters now in 2022. So it's most likely going to be better than what it is currently. And I think that is a fair growth in EPS during the years. The price to earnings is at 40++. Basically, it's not a cheap stock. So when you're going into this stock, you will find it to be somewhat expensive. So how was 2022 for Medistim? They've had a downturn at 36%. It's not the biggest downturn we have seen, more and worse, right? But it's still a little bit rough. And especially since their current evaluation is still around 40 PE, it's possible to fall even further. Though it is a low liquidity, so difficult to buy it and it's difficult to sell it. If you need to sell it, it can fall quickly. If not, it can stay exactly where it is. Like, the liquidity is making it difficult to say where it will go. They have managed to increase their sales and continue their growth quite well, so that have actually been good. Like, in USA, they have continued to improve. They have now 80% market share in Germany, for example, so they're doing well. Though they did experience a slowdown in the European Union in the third quarter. It should be mentioned, though, that they had 25% of the market share in Russia, and well, it is a little bit finicky there right now. So this is one of the reasons. One thing I should mention here as well is when I was going through analysis from DNB, they did actually mention, or they showed when they were estimating future growth, that EU will slowly take a little bit of a lesser space in their income. That is good news, though. In the presentation from Medistim, they did inform us about new guidelines from ESVS, the European Society of Vascular Surgery. They are now recommending the usage of intraoperative ultrasound. This is quite beneficial for Medistim, and it makes it more likely that their products will be in use. And when it comes to China, there is still more or less lockdown going on, or have hampered them during 2022, and this have created hospital restrictions, and a lot of surgeries may have been postponed, right? So that have been an issue, and also it has been a delay in the approval of the upgraded MiraQ, one of their ultrasound products, right? So, when it comes to the statement, you can see from the year 2014 to, well, 21, you can see the revenue have actually doubled, which is more or less expected. It's what most companies have done from the research we have done for now. But you can see that in 2022, the year to date, to Q1 to Q3, is stronger than what is 21. 320,000 it was in 21. So, it's looking good. It looks to be even stronger this year. You can notice that the results are actually tripled. Like, this is really good. But you can't really expect that it will continue. Basically, the reason it doesn't follow each other is because the margins have gotten so much better, right? It's, well, almost 9% better margin than what it was in 2014. So obviously it will be shown on the result. And as mentioned, this is still with 2022, so it actually looks quite good. The margin have also increased quite a lot when it comes to the EBIT, almost 10%. And one of the reasons is that they don't have any debt anymore. And if you look at the picture that I have up here on the right side corner, you can see that the gray is reoccurring sales and the orange is capital sales. So the good thing about reoccurring sales is a lot of this is smart cards, it's probes, products that make their MiraQ, which is in the capital sales, work. But another interesting thing is they have a little bit of a different business idea in America. Basically, every time you use the MiraQ, they pay for it. It's kind of like a pay-per-use situation. Not everywhere, but in America, this is kind of one of the things that make hospitals use it more. They can't take the big investment in the MiraQ, so they're just taking it surgery per surgery. And when it comes to the balance, it's no interest-bearing debt. It's looking really good. Leases going down. They literally have a good debt handling, right? It's like, look at this debt per equity, 0.35. It's almost no liabilities compared to equity. They have a very healthy balance. And they can literally just use the cash to pay down all liability right now. They have a very good control over the balance, and I have nothing to say negative here, just good stuff. So, when it comes to the cash flow, it is a little bit of an interesting one. As you can see, in 2014, it was close to 50,000, and it almost manages to triple. Well, you can call it a double or a triple. It depends if you're a half cup, full cup kind of guy. And 2022 might be getting even better. That is a very interesting thing about the cash flow. Another thing that you can notice is that it has a lot of bad years, the cash flow. So if you look a lot in the cash flow, you don't really know if you will buy it in a good year or a bad year, because every single year is just varying. And when it comes to the dividend, you can see that it's between 50 to 60% of the cash flow most of the time. Sometimes it's even around 70%. I'm not a big fan of that, because the yield is normally just around 1%, which is not really that strong. So they give a lot back to the shareholders, but it's actually not experienced as a lot. It's experienced as basically nothing. So yeah, that is not something I'm a big fan of. Normally I would say that they can use it to grow further, because a lot of companies would be better at using the money. The thing is, Medistim is in quite a niche, and they're growing very carefully. So yeah, like, they have no debt, they're taking things calmly, and they just give things back to the shareholders. So it might not be a good, like a bad situation for Medistim in itself. The niche is so unique. It will just be interesting to see how the growth will continue forward, and if their products will be niche enough to actually provide good returns for us as investors. When it comes to investing, you can see it's fairly stable, actually a slight downward trends. In Q1 to Q3, they have not added anything in cash flow yet. And you can see when it comes to their borrowing, it is quite consistent, right? It's like, I just took the financing in the cash flow and removed the dividend from it. So here they actually had to take up or get money in the financing to be able to pay the dividend. Sometimes loans, sometimes currency benefits, right? So it's a lot of reasons why it's on the plus. But you can see the last few years, this is mostly leases. You can see out of 6,600, they paid out in leases. Here it was a little bit less. So yeah, they have very good control of their financing, and their free cash flow is, well, doing normally quite good. You can also see that I added leases here just to show how much percentage of the cash flow it actually is. It's almost nothing, right? It's like, it's less than 10% of the cost. Most of the time even less than that. Their cash flow is very, very controlled. What is the benefits of Medistim? So they are in the defensive segment, they are a healthcare company, and they have managed to find their own little niche with very few competitors. Yeah, they have very good control of the area they are in. And when it comes to the good growth, actually they have been able to increase the market share in America from 23 to 25%. And the German market share is, I think I mentioned it earlier, around 80%. So yeah, their growth is doing good. And they have managed to increase 15% year over year. So from Q1 to Q3 21, Q1 to Q3 22, 15% growth. And that is a good growth. And when it comes to no interest-bearing debt, it's one of the few companies that actually have absolutely no debt. And that is a very beneficial time or thing in times like this, where interest is going up. Another thing to mention is, who is it that actually buy their products? A lot of this is governmentally owned businesses or hospitals. And well, if you need a surgery, you might want to have the best gear available. So interest should not create an issue for the purchases of these products. They have a healthy balance. Well, it goes together with no interest-bearing debt. They have a lot of equity, and their liquidity when it comes to the amount of cash at hand is immense. So based on that, they're doing very good. They have growing dividends. So basically every year they have grown their dividend a little bit. And if it comes to the growing dividends part, we can actually just take a look here, right? It's like the dividends have grown from 2014 from around 14,000, 15,000 to 68,000 in 2022. So this is closer to 4 times growth in dividend, which is quite a lot. And when it comes to the growing cash flow, that is also almost 3 times the amount. So obviously they have been able to provide with the expectations that have been in the stock. So what is the downsides of Medistim? The stock is very expensive. I've seen it to 80 PE, price earnings. And when it comes to the liquidity in the share, it is very little liquidity. If I'm looking at the share at this exact moment, I can see 20 stocks for buying at 218 Norwegian kroners and 15 that is selling at 233. And okay, it's in the start of the day, but still it's almost no liquidity, almost none at all. The first 30 minutes, literally 5 stocks have been sold. Yeah, that that is a negative part in it. It is also very reactive. You can just think about the numbers I just said, right? 218 to 233. It's almost 10% in just that. Just buying and selling can actually decrease or increase the stock with 7% in a day. They're also in an innovative area, so suddenly their products might be out of date. Perhaps a new product is coming. So that is the risk in healthcare, right? It's like you don't know if what they're currently working on will be good in 5 years or in 10 years. It might be like totally out there. And they also have an unstable cash flow. Like from 2014, it was high. And then it's like to 2016, it was a downward trend. And it was almost half of the cash flow. Yeah, it's difficult to know if you will get into the share in a good year or a bad year. Or perhaps the next year will be bad and will react based on that. Yeah, that is clear downsides in the stock. So, where is Medistim going forward? It is expected that Medistim will continue their growth. DNB estimates that the sales for 2024 will reach around 542 or 43 million NOK. Medistim themselves are more or less expecting to improve their sales because of the untapped markets that is in their segments. And they are currently working on entry-level solutions for the BRIC markets, like for Brazil, India, and China, to get into these markets. The krona is also kind of a black sheep. If the krona valuation is increasing, basically the costs in Medistim will increase and it will lower their income. So the current market is very beneficial for Medistim, and it might look better now than what it actually is. So that is something that you as an investor need to take into account as well. It is more or less expected that it will continue to increase their dividend. It should be mentioned that DNB in their analysis actually show that they will decrease the dividend next year. But honestly, like their cash flow is looking good. So, well, I would imagine that they won't. It probably will depend a little bit on how the market is reacting on the current crisis, right? Other than that, the Asian market is slowly going up, or it looks like it will be going up as China is opening a little bit up with the COVID restrictions. It is a little bit of a worry to notice that, well, they're currently struggling a lot with COVID due to that. And due to the opening, it might actually create some issues for other countries as well, with new versions of COVID spreading around. But hopefully things will go better there, and they will be able to increase their sales, and their MiraQ that have been new upgraded will be accepted in China, so they can continue a better growth. It is also a little bit of notification about new competitors, right? It's like the margins are increasing and improving, so it might be new competitors that will see this as an interesting market, especially when it comes to these a little bit more wealthy, bigger companies. And it's like, yeah, why are we not doing this? It's obviously working for them. They have good margins. It will help our statement and cash flow, and it will look better for us. Yeah, that is a negative side for Medistim. Another thing that actually could be mentioned is the same big companies might be like, we don't want to create our own, we will just buy this one because it's already there, it has 35% market share. So yeah, it's also an upside risk in the new competitor segment here. So it is actually a possibility that Medistim will be bought up. When it comes to the innovation, I went into it earlier, their products might actually just go out of date by some fluke or some good innovation that will help heart surgery or surgery in general. So it will and always will be risk in healthcare. Suddenly someone invents something that actually works a lot better than what you have and your product is out of date. So other than that, I would like to go into the disclaimer here. This is not financial advice for anyone to buy or sell Medistim. It is though a simple analysis of a Norwegian company to give a little bit of insight. And I do hope you leave a comment a little bit about what you're thinking about the video, if it is helping. Like honestly, I do like all of the positive feedback that I've gotten, and it helps a lot with motivation. I didn't expect to get feedback on basically every video, so it makes me really happy. And it makes me really happy that it actually helps. Other than that, the main resources are yearly reports, quarterly reports, and presentations. And of course, I do dabble and look into the DNB analysis from time to time, and perhaps other places. So have a nice time. Cheers.